welcome to my channel. I'm Doris. I'm here to share with you about my stock account and today's market updates. Today, SQQQ closed up 1.79% to 16.52. SPY closed down 0.4%, and United Natural Gas closed down 5.2%, and Apple has closed down 0.57%. Right now, the net asset of my account is 70,276.36. Today, the market generally closed lower. Dow Jones Industrial Average closed down 0.19%, Nasdaq closed down 0.58%, and S&P 500 closed down 0.39%. The market has been continuously performing not well ever since the beginning of December. Today, the tech industries continue to lead with a loss. November ADP private employment data again confirmed a cooling labor market, reinforcing expectations that the Fed will cut interest rates next year. The market is focused on Friday's non-farm payrolls data to judge the Fed's future interest rate path. Today, the U.S. Treasury's yields continue to fall. The yield on the 10-year Treasury note fell 4.6 basis points to 4.125% on Wednesday, and the yield on the 30-year note fell 8.2 basis points to 4.224% after hitting an intraday low of 4.211%. On economic data Wednesday, private payrolls rose in November, and while it was lower than economists had expected, which is another sign that the labor market is cooling. Private U.S. companies added another 103,000 employees in November, which was lower than the revised October figure and the forecast of 128,000. This is the latest series of labor market data this week. On Tuesday, the Labor Department reported that the number of job openings fell to 8.73 million in October, the lowest level since 2021. Now, as we may be wondering, normally the U.S. stock market, at least recently, has been focusing on the Treasury yields, while as for today, the Treasury yields closed lower. Yet the market has not been doing well because we have been focusing on the concern for recession, that the concern for recession has always been going on during the interest rate hike cycle, while the labor market showed a tight state all throughout the past year, and the job market has started to show some signs of cooling, and reminding us the recession may coming soon. Since March 2024, the Fed has raised interest rates sharply to ease labor market tensions and cool inflation. The Fed is now watching its labor market report to consider its next policy steps. This week's data will be focused on Friday's non-farm payrolls data, which is a key clue to the possibility of inflation risks triggered by the U.S. economic strength and wage growth. Markets almost certain that the Fed's next move is to interest rate cut. The Fed is now at a silent period, which means that the officials have been ambiguous about the next week's policy meeting. Despite the recent hawkish comments from a number of Fed officials, traders are confident that the Fed will cut interest rates next year. For concern of the U.S. economy as a whole, this is all I have for today. Thank you for listening. Don't forget to subscribe and see you next episode.